This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is James West. James is a technologist. He's a digital assets pioneer, it says here, and I believe he is a former trader at a hedge fund. And well, now he is the CEO of Globe, which is described as Coinbase for derivatives. It's a crypto derivatives exchange startup. And well, welcome to the show, James. How are you doing?
I'm good, thanks. Good to be here.
It's good to have you here. You've actually got quite an interesting bio, James, just reading it. So you've got a PhD from UCL, and prior to that you were studying algebraic geometry at Cambridge, which sounds absolutely fascinating if you're into maths and algebra, I'm sure, which I'm not, I might add, James, but also your... Thank you. Your co-founder, Sean, and you guys went to Y Combinator together, as I understand it. He's kind of got an interesting one as well. He was a trader after publishing original research on gravitational waves. Before that, he earned a master's in astrophysics from Cambridge. So this is actually quite interesting in terms of, we can do the origin story for Globe in a minute, but obviously you guys are buddies from Cambridge University days?
Yeah, I mean, you know, like most people who are kind of serious gravitational waves researchers, Sean was also a god-tier computer gamer back in the day. So he ran, I think, the fifth largest World of Warcraft guild.
Wow.
If that isn't too much of a blast from the past.
Yeah, I love it. Oh, that's fantastic. So, and just take us back, how long ago is this that you guys were doing some reasonably impressive but nonetheless super nerdy stuff at Cambridge?
I don't think the super nerdy stuff ever stops, to be honest with you.
Yeah.
About 2005 through 2009. So we kind of graduated at the absolute height of the financial crisis.
Right. And
the very inception moment in many ways for Bitcoin.
Yeah, well, that is exactly right. So how do you guys kind of pivot then from, and look, forgive me, when I say super nerdy, I obviously mean that with affection, but how do you pivot from the super nerdy astrophysics and algebraic geometry? It really rolls off the tongue, that one. How do you pivot from that to, I suppose, did you have a kind of, did you go into more traditional finance before discovering blockchain?
Yeah, I mean, actually, all the sort of cryptography stuff is kind of a consequence of algebraic geometry. So that's the sort of first connection there. Like, all elliptic curves are definitely a very studied object there, and we're really kind of fundamentally understood through that. And as a graduate student in the early days, I reproved some of the classification results between. This is going way too far, but. Kind of classifying broad spaces of things a bit like elliptic curves. So really, deeply understanding the objects that kind of underpin all of sort of modern cryptography. So that was the sort of first way in which I was even remotely involved with it. And then it was a pretty well-worn path. So I went off to go try and do what good I could in the world in 2009. Which was very bleakly described to me by pretty much every university advisor at the time of being, well, okay, there's no jobs left. Like, everyone who graduated the year before was getting fired. Lehman Brothers was dying or dead. And there was pretty much no money in academia either, as they saw it. So funding in research the year I graduated went down like 75%. And applications spiked, so it was a real kind of bum rush for pretty much nothing in the end. So I went off and tried to sort of pursue some earlier interests I had. One was sort of around longevity. So I actually have a research paper in Proceedings of the National Academy where I try to understand sort of fundamentally how aging is sort of driving different processes in the sort of at the level just above the genomic level. I spent a bit of time sort of working on the sort of statistical and machine learning techniques, which underpin some of the sort of prognostic work around cancer today. I spent a bit of time working on time series. It was sort of a weird program where you could kind of do what you wanted, and were broadly encouraged to be sort of as broad as you wanted in research. And I'd finished after about a year and a half with about 8 papers. Although I never published some of the work I did in pure math, and tried to work out where to go next. And the most well-worn path really was to kind of go into hedge funds, and to go apply these same kind of techniques to financial markets. And so I spent about a year just chilling out, wrestling with myself about where I was going to go, and ended up joining kind of a small family shop that had maybe $30 million or something at that time. And in 4 years, we grew to about 300 million. A little bit depends on how you factor in leverage and how you factor in the changes in Forex rates between the dollar, euro, and the pound today. I was an analyst, I think, when I started, and about a month later, I was sort of, maybe 3 months later, I was kind of owning most of the modeling there, and then kind of moved into a more strategic managerial role after about 2-3 years. Because of the machine learning stuff I did during the PhD, I was looking at kind of applying these techniques into existing futures markets on the market making side. I kind of found crypto, and the thesis I had back then really was that there was going to be more money being made in market making crypto than there was going to be all of US equities. And that was kind of the moment that I went all in on it. It took about a year before I finally escaped that job, trying to convince them. I think they thought I was a bit crazy because I was simultaneously kind of telling them to short the market because of the really bad, fundamentals and alt data signals on it at the time, but sort of saying, well, actually we should be, taking $1 billion bet here, and putting everything we can towards market making on the future side. And yeah, we originally kind of started trying to market make futures, but just found so many horrible practices. Like if you've seen the SEC report on BitMEX, certainly the team at the time kind of disclosed, at least privately, that was pretty much what was going on. And so it sort of felt impossible to go trade on those venues given how dodgy they were, and we had to go make something better.
Yeah.
So that was the sort of transition from being university roommates to founding Globe.
Yeah, well, that's a very interesting story then, James, and you've got a fascinating background. So I'm going to pick up on some of those threads that you mentioned. We'll come back to longevity, and yeah, I'd love to get your opinions on what's happening with things like cancer research and stuff like that. So we'll save that for the kind of the fun part at the end of the show. So in terms of Globe then, I mean, yeah, it's interesting that you reference BitMEX, obviously, kind of known as what was very much the first Bitcoin derivatives platform, but it does, its reputation has, I think it's fair to say, been somewhat tarnished with the benefit of hindsight, and it's now viewed as a little bit of an unfortunate casino, isn't it?
Yeah, I mean, oddly enough, crypto exchange is a very generational business, and that people generally get into it and either they kind of abandon what they're doing and just go, do DeFi or something. This has been a very common path, or they get so rich so quickly that they become incredibly lazy. And that kind of happened with BitMEX. I wouldn't describe them at all as being the first crypto derivatives place. I think they were about the 5th or the 10th or even the 20th. But most of the ones that came beforehand are now dead. Yeah. Like Arthur Hayes, he traded on ICBit, which was a futures trading venue before BitMEX, actually. And that's kind of where they sort of discovered all the things that they felt were wrong at that time and what drove them to build BitMEX. And the cycle sort of seems to continue to repeat as the founders from previously successful generations of exchanges just sort of hang up their boots and, stop trying to tackle the problems of their day. And inevitably their lunch gets eaten by someone else.
So if that is the case, and look, that's in some ways that is very much the cycle of life, that is evolution, survival of the fittest, and there's no more ruthless survival of the fittest adversarial environment than financial markets, and Bitcoin derivative or crypto derivative markets are certainly even more intense than most. So that if that's the case, what are you doing to, I suppose, try and make sure that is something that doesn't happen to you and your team?
I think a lot of it kind of comes in the values that you instill in the people, and trying to have a mission that's not just going to be resolved after a week.
Yeah.
One of my favorite projects right now, their mission was that they're going to win an NFT from Andre Croin, right? And they did, and it's over. It was sort of like achieved in a week.
Yeah.
And there are other sort of crypto futures exchanges who got there, and well, their mission is we're going to try to accelerate Bitcoin adoption. Okay, well, you just have to get one more person to get Bitcoin, and you're kind of done. So, there are a lot where just the mission is so staggeringly trivial that everyone sort of loses interest pretty quickly. A lot of it, I think, is how you structure the long-term incentives with the team, and how you make them kind of long-term greedy. If you look at a lot of the existing players right now, they're constantly having to sort of flush through different personnel. So Binance they're constantly having to fire entire teams because of corruption, because of bad process, because of misaligned incentives. So that's kind of another key aspect of having any meaningful longevity.
Yeah, that's a great term. I really enjoyed that, long-term greedy. It's a great way of putting it. Well, we've kind of got a little bit ahead of ourselves, James, in that, I haven't really given you an opportunity just to really kind of speak from the beginning, or at a high level, if you like. So I think, people will now understand that Globe is primarily, I don't even want to put words in your mouth. Is it primarily a Bitcoin derivatives exchange? I know you also talk about, hoping to provide a platform for traders to exchange anything. So look, let's, as I say, start from the beginning, and please just provide a kind of overview of what Globe is, and really what the high-level vision is.
Yeah, I think in two words, what we say is we want to exchange everything. And there's a bit more to that than kind of immediately apparent. But first of all, it's kind of creating new markets for exchange where they weren't really possible before. So we had the first VIX futures. We enabled SME access to wealth and crypto asset management. We were sort of the first place where serious institutional market makers could come and provide meaningful liquidity. We were the first sort of meaningful true WebSocket API where algo traders could kind of come trade and were not sort of massively disadvantaged against the exchange. Sooner or later, I think we'll be building out some of the first, NFT lending and fractionalization markets. And sort of, there's just an incredible amount of alpha that's still kind of tied up. I think sometimes the way we describe this internally is kind of realizing Markowitz's vision. So if you kind of go back to 1952, Markowitz's modern portfolio theory papers, which are surprisingly not very modern, 70 years later. Yeah. The question we kind of ask from that is, well, what does sort of the world's portfolio look like? And under various assumptions, it starts to look like, okay, well, it's just sort of a market cap weighted portfolio of everything. And right now, there's still so many things where you just can't really trade it. Like art is kind of becoming a lot more tradable through NFTs, but it's incredibly nascent, incredibly problematic all over the place. And the second part of that sort of change is about changing the practices of the industry towards market integrity, towards globalization of access. We were the first exchange platform to offer meaningful market data across depth sequences and across open interest changes. And there are other platforms that sort of announced they're finally reducing the update times on this data to like 15 minutes, and I think we'd already provided a sort of a second level resolution long before that. So there's a lot that's kind of converging around there. Sometimes we call it solving liquidity internally, but the term liquidity is so poorly understood in crypto that it doesn't really bear using.
Well, you look, lots of interesting statements from you there, James, but that in itself is perhaps a thread that we need to pull. So what do you mean when you say that liquidity is so poorly understood that it's not even really worth mentioning when it comes to crypto?
Yeah, I mean, so first of all, it's sort of, well, one is that are people making trades in a particular asset or sort of theme? And the second is it possible to do so? And usually what it means is it possible to do so, and how much can you kind of do it without, prices moving too much when they shouldn't be moving? And those sort of two quite different meanings are, in practice, they're often somewhat correlated, but they're quite different fundamentally. And so, in the next few weeks, we should be one of the world's most liquid exchanges on the future side, certainly in terms of the amount quoted in the book. We probably still won't be in terms of the amount that people actually take from it for, maybe a year or two at least. Given how quickly the fastest futures exchanges in crypto have ever grown.
Yeah, and in terms of I suppose the market participants or the traders that you guys are targeting to hopefully come and trade on your platform, who are the different, I suppose, market segments that you're targeting, and where are they based?
These things are strangely global, funnily enough.
Yes.
We tend to have, more sophisticated traders that tend to trade through the API. There are a good amount, cringe to say Russia, but, the Russian people are generally not behind this war for what it's worth. We see a decent amount in sort of Central Europe, bits in India, Turkey. I think every futures exchange kind of attracts more or less the same countries. There are some that was purely sort of China previously, but with, with Asian markets the way they are right now, that's, there's not too much flow coming outside of China, or Japan or Korea for that matter, where it's sort of very much kind of clamped down. On the market making side, so I think originally our thesis was going to be that, instead of competing with the sort of large market making players, so Jump and Citadel and XDX and so forth, we were going to enable them. But actually what happened instead is that they spent so long not getting in the space during the sort of, whatever it was, 2019, 2020 bear market or sideways market, that people just kind of abandoned them and they had offshoots. And now, most of the market makers we have are just offshoots of these places. So we have people that left market making desks at Citadel or at some of the major banks, or do we have someone from XDX? I don't know, but offshoots really, for the big institutional market making players, where maybe they'll get acquired by them, maybe they'll merge, maybe they'll just sit around being meaningful competitors. It's not really clear how that's going to evolve.
Sure. And as I understand it, you've had at least one fundraising round, and seems like you have, some reasonably high-profile names that have helped back you guys. You've got Y Combinator, Pantera Capital, 3 Arrows, and a number of others. What was that process like? And that's been reasonably successful so far.
Yeah, it was sort of came in two phases. So first was sort of the Silicon Valley phase, which was when YC and Tim Draper and Pantera and Wave and a few others kind of came in. And they were really, they were investing in the equity. They're here more or less forever. They fundamentally want you to kind of succeed and to grow to being $1 billion business. And they're at that phase really investing more in the team than anything else. Like they might like the thesis, they might feel there's a decent amount of defensibility. They definitely will feel that the market's big enough, but that's sort of fundamentally what they're looking at and kind of how they're helping out. And then there was a second phase that was, just before we started trading, where we did a token sale, and that sort of drew in a lot more of I think there were 20, 30 different prop trading funds So kind of a lot of that was sort of a token sale to the customers of the exchange. So Three Arrows, BR Capital, MGNR, those types. Actually, some of those are also offshoots from very, very big traditional finance asset managers who kind of came in around that point. But there were also a lot of influencers and marketing agencies who kind of joined the party around then.
And so,
and they're looking at it very differently. They're just sort of like, well, what's the utility I get from this? A lot of people are just thinking, okay, what's the price evolution going to be? And a lot of them are sort of shorter term. So about sort of 70% have stuck around, which is higher than most. You get the sort of bad actor VCs do get involved in these things. And no matter how much due diligence you do, they'll just sort of say, well, we were super bearish on the market, so we'll buy back later and we just wanted to sell now. But equity investors don't get in and out. Equity investors are just in forever and keep doubling down until IPO or something.
Yeah, for sure. And so you talked about the token. So that's the GDT token, I think. So briefly, how does that work? That's the Globe Exchange token, effectively, right?
Yeah, I mean it's a utility token similar to other exchange utility tokens, so BNB, Huobi token, OKT.
Yeah.
It's there to reduce fees. It's there to be the most capital efficient trading margin for the venue. So after we introduced unified margining, so I think we're the first and still only venue offering that. GDT is part of the margin that you can use. You can be fully GDT, you can be whatever percentage you like. We kind of offer a bit of extra leverage through that, just because of the confidence that we have in the liquidity on the token. We gain access to some of the functionality of the exchange, and fundamentally, it's sort of the currency in which all fees, or at least some percentage of all fees, are paid on the exchange. That can be through buybacks. It has a burn mechanism similar to every other exchange token. That's there really to decentralize the ownership, naturally away from the exchange and towards its community.
Sure.
And in the longer term, I think there's a potential to kind of roll into a layer one. There's a potential to move into a DAO model like BitDAO. There's a potential to kind of make it a broader governance token, but all of those are very kind of different regulatory possibilities. And it's something that we'll look at, once we sort of burnt a lot more of the token.
Sure. And James, I'm not a trader myself, but I know, well enough to stay away. But I can see that you have something that you called unified margin, which you describe as a new type of margin account. So I wonder if you just want to talk about that for if there are derivatives traders listening that would appreciate this particular offering. Let's just hear about that, and then I want to dig a little bit more into what you're talking about before with the possible fractionalized NFTs and that side of things, because that's a little bit more up my alley. But what is unified margin? So what is that particular offering?
So the very earliest days of Bitcoin futures, there was ICBit, and if I remember right, that was Bitcoin margin, and certainly BitMEX was Bitcoin margined, and you would trade effectively an inverse contract. So the contracts would be like sized to $1, and your margin would be purely Bitcoin. OKX came along, and I think they were technically our testnet was the first venue where you could be tether margined or dollar margined and trade a linear, but OKX I think was the first one that was certainly like super liquid to offer kind of dollar-like margining through tether and then coin units on the future. And unified margining now lets you put more or less anything as margin, so potentially even NFTs themselves, and use that to trade futures. So instead of having to sort of take a view purely on Bitcoin or maybe sort of manage that risk through trading other quantos, was what BitMEX offered at the time, or having to take positions in other assets, you can kind of margin in a combination of our native token GDT together maybe with Bitcoin, together maybe with your other layer ones of your choice, Solana, Aiva, nearly said Luna, and a mixture of stable coins too. So it gives you just sort of a very natural way to sort of switch between risk on and risk off in your collateral. I think Binance made an announcement that they may have it at some point, maybe a few months after it went into production for us. We'll see. I mean, it was, I think when Binance launched futures, it was 3 years after the original roadmap. So who knows? But I wouldn't be surprised if there are other places that start offering it.
Sure. And yeah, so you talked earlier about offering, potentially some interesting new ways to either, if not trade NFTs, certainly to fractionalize NFTs. So just, I mean, I know what that means, but talk us through what that would look like, and I suppose, what the thesis is, why that's interesting to you.
I think what most people looking at this space eventually want to do is take real world assets or take digital things that have meaningful kind of financial cash flows. So like, a flat or a painting that maybe you pay to sort of see in a gallery, something like that. And to sort of split that into lots of smaller components and allow that to be liquidly traded. So allow sort of someone anywhere in the world to sort of own, 5% of the Mona Lisa's viewing cash flows, or some percentage of maybe like revenue generated in an oil field, or some percentage of rents on a flat. Right now, it's pretty much purely digital. There are little bits of experiments in real estate, but they're super early. Right now, the sort of big impediment really is just regulation, and that somehow the second you try to fractionalize and the second you start attaching cash flows to things, they more or less become securities. So I think for that to work, that there needs to be kind of you can take incredible regulatory risk and just list securities in the Uniswap model, I suppose you might call it. But it needs regulatory clarity as to whether that's going to be okay, and when we can kind of reach that phase of Markovitz's dream.
Yeah, so what you're talking about effectively, James, really is in, some kind of hyperfuture market where it literally is possible to trade really anything against anything, right?
Yeah, that's sort of fundamentally what we've been building to, and I think what mankind has been building towards really for 7,000 years now.
Yeah,
but it's slow progress,
We'll put a time frame on it then. Like, zoom out as far as you want to go. How far along that cycle are we? And even sure, I understand that the regulatory side is kind of the major holdup. But what else is?
That's the big limiting factor. I think 10 to 20 years we could get somewhere like that. But there's just so many different kind of individual nation states' interests that kind of conflict with this. Nations like to be able to practice isolationism.
Yeah.
But it just becomes harder and harder for them to enforce it when you do have these, decentralized permissionless systems. And so how that's going to come to a head with the rise of CBDCs, which I think are completely inevitable even in the next 5 years, is, I don't know. It's one of those things where there's just multiple different, multiple different ways this can play out. And it's kind of up to the world to decide.
Absolutely. Well, I mean, speaking of zooming out, then James, be interested, you're obviously a trader. You'd have a little bit of an inside track on what other traders are thinking by running an exchange. Very volatile time in the world. Obviously, we've had quite a significant dump really across all financial markets in the last month or two. Obviously had the Luna situation, which has certainly impacted crypto. So yeah, what's your kind of take on markets at the moment, and how deep is this downturn, this bear market looking? What do you think?
I think the way to define bear markets in crypto is really just to sort of look at, are the holders underwater or not? And that all kind of changed around May 19th when there was this huge regulatory shock coming out of China when they banned mining. And from then, it's more or less been a bear market. The fundamentals were pretty poor beforehand. So there was really weak adoption. There wasn't really sort of much meaningful usage of these things. And there was sort of a lot of debt in some sense occurring in the system, in the sense that there were just these gigantic Ponzi schemes that were being built at that time that were sort of locked up and had to unwind. And their unwinding is going to be incredibly painful, and it's still kind of going. I include Luna in that. It's definitely that there's a spectrum of just outright Ponzi scheme through to something that tries to be utopian but has reflexive attributes to it, but the upshot of Luna was definitely on the worst side of the spectrum. And so those things blowing up puts a lot of downwards pressure on the decline of institutional buy pressure. Just, when there's no one rational or sane in the room, prices can kind of go anywhere. And that hugely declined kind of end of 2021. So I think about October, you stopped seeing trillion-dollar asset managers putting funds on the Coinbase and really propping up the price. So yeah, I think things look pretty problematic right now. We're sort of maybe a year into a bear market. Global macro is terrible. We're still kind of paying off the sort of long overhang of the COVID pandemic. And, what is it now? 10 years plus of market manipulation by the Fed. And so equities are the most obscenely overpriced they've ever been. We are only part into a correction there. It won't really be too much like the 1999 correction, in that, there are meaningful revenues here, but growth is getting smashed and will probably continue to get smashed. The correlation with Bitcoin grew dramatically, during 2021, I think, late 2020 is kind of when it started. That was really just because, but previously it was sort of mean reverting between maybe minus 0.2 and 0.2 correlation. It just sort of jumped up. And what happened really was a lot of large asset managers started holding Bitcoin. And then when stocks went down, they only wanted to hold a certain percentage of their book in Bitcoin, so they had to dump the Bitcoin. And that essentially created this strong correlation between Bitcoin and traditional equities markets. And that's going to stay until they've unwound their positions fully, which I don't think is going to happen. Certainly not this cycle. So you're going to keep seeing strong correlation with equities. Equities have probably got another leg to go down. Or at least are extremely overpriced, and it's really up to the Fed which way prices are going to go there. That's kind of the situation in the markets right now.
Yeah, so not a lot of good news there, James. So if that's
I think there's still going to be new Ponzi schemes pop up, and they'll do well temporarily.
Look, I have no doubt, and look, there's some great NFTs on the horizon, James. Let me tell you. But the $1 million question then, or the $1 question, if you like, frame it how you want, James. Then is if let's say you're either a new investor, you're a young investor just starting out in the market, or perhaps you've you've come into some liquidity somehow, and you want to start your investing journey then. So what does that person do with their investable?
I think actually the best way is to get involved in a project.
Yeah.
The first thing is not to spend every dollar you have. It's generally like dollar cost averaging into good projects that make sense and provide some kind of differentiated utility makes sense. Accumulating value tokens where maybe, they're very cheap on a price to earnings level, or they're very cheap. Just the treasury that the project manages is more than the market cap of the token. They'll probably do okay. But fundamentally, actually really understanding what the space is, getting involved in a project is probably the best thing for anyone to do. Certainly for the next year, just with macro the way it is.
Absolutely, that's really well said. All right, well, let's finish off this part of the podcast, James, and then I'm actually really looking forward to running you through the very famous crypto conversation hot take round. We'll do that after the break. Before we do that, though, please, just tell people where they should go to find out more about what you guys are doing with Globe, and lay it out who the exchange is for and why people should come and trade on it.
First place to start is globe.exchange. Our Twitter covers a lot of the new stuff that we release. We put out on Medium often sort of thesis pieces around the new things that we're building. These, oddly enough, interviews I do tend to be the best place to kind of get alpha on the new things that we're building before they come out, because somehow people really hate having to wait more than 3 days whilst things get built. That's apparently an unreasonable timeline. Those are the best places.
And well, speaking of that, is there anything you can, I mean, obviously we don't want to hint at things that are more than 3 days away, James, but anything you do want to point to that is currently in the product pipeline coming up?
I mean, we ship new features every week. A lot of them are quite small things. It's really just driven by what the traders are kind of telling us, and what we think is also going to benefit them. So just right now, there are concerns about Tether. I actually think it looks pretty good. Like they had their biggest stress test ever, and they had to sell a couple of treasuries, and they're readjusting the commercial paper so it's less toxic, and the overall audit's actually pretty clean. But there's a good amount of interest in just sort of moving your stable exposure over to USDC. So we'll probably add that pretty soon in the next 3 days, potentially.
Yeah, nice. All right. Thank you for that. All right. Well, let's go to a very quick break, and then we will come back and we'll run James through the very famous crypto conversation hot take round. We'll be back in 1 second.
For crypto indices and benchmarking, Brave New Coin's powerful indexing engine can calculate high-frequency intraday and end-of-day indices for a wide range of index products. Brave New Coin's custom indices team delivers experienced consultancy, premium data, and trusted calculation. Contact BNC today to find out more.
All right, we are back, and I'm with James West. James is the CEO at Globe, which of course is self-described, I think, as the Coinbase for derivatives. But yeah, I've very much enjoyed talking to you so far, James. But I like to finish each Crypto Conversation podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Let's go.
Let's go, James. All right, I'm just going to run some questions by you. There's no right or wrong way to do this. Just want your honest opinions, hot take style. Answer them any way you want. Question 1 is, where would you say you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Is there another part of the spectrum where Bitcoin isn't even the long-term main chain?
Well, yeah, I mean, that's multi-chain, isn't it?
Yeah, well, I mean, there's sort of another thing that dominates on top even. I think I'm a little bit towards multi-chain. Definitely in the short term, I'm a little bit maxi in the sense I expect dominance to increase. Short term meaning 2 years, 1 year.
So you expect Bitcoin dominance to increase in the next 2 years? Is that because it's a bear market thing?
Yeah, pretty much. Just somehow alts will sell, they're less liquid. Institutional buyers are really just buying the top 5. So you'll see top 5 strengthening against everything else, and that will mean the upshot to an extent is Bitcoin strengthens versus everything else.
Yeah, and to be fair, we're kind of due a washout of some of the froth, some of the scams.
I'm looking forward to those Ponzi's Gunners area.
Very much so. All right. Well, what would you say then, James, is your firmest conviction crypto opinion?
I think in the very long run, there's going to be meaningful, permissionless, decentralized systems. They're always going to provide some value.
Yeah. All right. Nice. UBI as a potential fix for AI-induced automation, or as a kind of potential fix for some kind of future dystopia where we have runaway wealth inequality. UBI, good idea or bad idea?
Probably not. I think there's just too much to change about the fundamental nature of humanity, and that the people will want to continue working or doing things resembling work and will derive a lot of meaningful value from that.
No doubt. All right. Well, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, with that in mind, James, anything you like here? Blockchain, Bitcoin, Globe, what does it all look like in 10 years' time?
I think CBDCs will probably dominate by then. We'll have maybe 50% of the world will be on a central bank digital currency. The rest is really, really unpredictable, to be honest with you.
You're telling me, I reckon.
Yeah.
10 years is a very long time, especially in crypto. Well, I suppose the flip side of that, James, is, a famous quote by sci-fi author William Gibson, who of course said that the future is already here, it's just not evenly distributed. So with that in mind, can you think of an example of the future being here right now, but most people just aren't really aware of it?
I mean, I think mostly, the world converges to look like San Francisco. And has done for the last, 100 years or thereabouts. I don't actually know if that's the origin of the quote, but I wouldn't be surprised that the UK tends to just gradually catch up with being culturally the way the US is. So the way that dating mechanics work right now in the UK is starting to be sort of the way they were in large parts of the US in the 90s.
What does that mean, James? What do you mean by that? That's fascinating. What are the dating mechanics in the UK that are based on?
Yeah, I mean, it was really not super acceptable to sort of casually date lots of people at the same time, and that's changed quite a bit now. Yeah. Interesting.
Okay. We talked a bit at the beginning about your background in algebraic geometry. God, I love saying that. And of course, elliptic curves, which are kind of one of the foundations of cryptography and blockchain. Hot take style. What is an elliptic curve?
I think there's like there's sort of a disparaging math answer that where it's described in terms of an even more complicated set of objects. That generally is how we like to do it. Just describing elliptic curves in terms of abelian groups.
All right.
Yeah, I don't think I have a short answer for that. I think what is interesting about it is that there's an abelian group on top of it. So it's a particular type of shape that is somehow very, very smooth, and that you can kind of take 2 points and add them together and find another point in that shape.
Yeah, that is exactly right, and that is very well said. And so I think listeners will be able to easily imagine that in their mind's eye as you say that. So thank you for that, James. We also talked about your interest in, I think, longevity studies. Even you said something about I think maybe contemporary or modern cancer research. So again, look, I don't mean to kind of minimize these fields when I say hot take style, but I mean, yes, I'd love to just get a kind of summary of your views in terms of, well, let's do cancer research first. Where are we at?
Disappointment.
Okay.
Really, really disappointing. I mean, we can predict things a bit better, but we can't really treat that much better. Things have been really disappointing for like 20, 30 years right now. I'm a bit behind, so maybe things have 180'd a bit last 5 years, but it was super disappointing at the time. The reality is that the view is just it's too many different diseases and it's just too many different problems very slowly going anywhere.
Well, if that's the case, I'm not super optimistic that as to what you're going to tell us in terms of longevity. Is this related to transhumanism? Is it the same thing? Where are we on the quest for immortality, James?
I think that's actually a bit more interesting. So longevity, just there are a lot of different takes on it. And I remember growing up and just thinking, long term, we were all just going to be brains in jars,
Yeah.
And there's definitely problems to be solved there. There's sort of the constant sort of death of the actual brain matter itself, and needing to find ways to sustain that and regrow that. But actually, it seems kind of viable. The issue, I guess, really is just getting around the regulatory side of being actually allowed to try to do anything like that. The other techniques people are using, not much progress. Yeah, there's a long-running improvement in human lifespan, but it's probably more driven by just modern medicine rather than anything else,
Yeah, I saw there's a new book out. I couldn't tell you the title of the book or the author, so that's not much use. But I think there was a big newspaper article. I was reading about it on Twitter last night. But I think the summary of it was, most of what people do to try and live longer, everything from drinking red wine to intermittent fasting to vitamin supplements, none of it will make too much difference at all, and kind of the best thing you can do is just not things like not smoke, do resistance training and lots of exercise, and eat a varied diet, and then the rest is just genetics. I broadly support this statement.
Like the stuff that the sort of weird Silicon Valley guys are doing, it might extend your life like half a year in expectation. It's a really, really small effect, right? Lifting heavy, or at least moderately heavy, eating a good diet is a much, much bigger effect size, and just not smoking, Jesus.
All right. Let's start to finish this off, James. Time to zoom out, time to get weird if we haven't already got weird. But what do you see as the long-term future for the human race? Do you see dystopia or utopia?
I think they're comparably likely. Mercifully, our generation is not going to make that choice. All we can do really is try and facilitate future generations to go the right way.
Yeah, sometimes it's as simple and as clear as that. All right. Finally, James, what is your favorite science fiction book, film, TV show, or universe?
Oof. I'm not actually that much of a science fiction guy. I can enjoy Star Wars, but the most recent stuff's been pretty shocking. That's all I got to say to that. Well
said. Fair enough. Let's leave it there. What about Stranger Things? Do you have kids? Do you watch Stranger Things? No?
I do have kids. I have a 3-year-old and a 1-year-old, but we don't watch Stranger Things. We're too busy with Peppa Pig.
Yeah, they're too young. That's all right. All right. Well, listeners, just please note that there is a new season of Stranger Things dropping on Netflix this weekend. Me and my 11-year-old, we're excited, James. But anyway, we have reached the end of the show. Again, look, please tell the listeners where they can find you on Twitter or wherever else you like to hang out on the internet, and again just where they should go to find out what you guys are doing. All kinds of exotic trading instruments at Globe.
Sure, yeah, check us out at globe.exchange. Our Twitter is @globedx.
Awesome. Thanks very much, James. All the best, and bye for now.
Cheers. Bye, guys.
All right, there you go. That was James West from Globe. Man, look, I didn't know too much about James, didn't know too much about Globe, but man, I actually really enjoyed talking to James. It's one of those ones, sometimes the podcasts where you don't know too much about the guest, they turn out to be good ones just because, interesting. I mean, look, anyone, I know we've talked about this a little bit, but anyone who has a degree or a PhD even in algebraic geometry from Cambridge. I mean, that's good stuff, You've got to respect the hustle. So I enjoyed that very much. Thank you, James. Thank you for coming on the show. Thank you, listeners, for listening to the show. If you did enjoy the show and you're still listening here at the end of the show, hey, more power to you. Please don't forget to subscribe to the Crypto Conversation podcast in whatever podcast app you are using. Please even feel free to give us a nice rating in Apple iTunes or the Apple Podcast app. Always appreciate that. If you want to get at me, hit me up on Twitter at AndyPickeringNZ, at Brave New Coin, or drop me an email, andy@bravenewcoin.com. All right. That's us. That was today's show. We're out of here. Thanks, team. This was the Crypto Conversation for Brave New Coin.